What's going on, everyone? Welcome to this video. So in this video, I'm going to be covering the basics and the core concepts of supply and demand zones, how to find them, how to draw them, and how to make sure that you choose the right ones to trade off so you don't get trapped into having too many levels on the chart and basically trading every single zone and having extra losses that you could avoid by knowing these core concepts that I'm going to be explaining to you. So let me start off with some core and very key things that you need to understand of the different types of supply and demand levels. So the first one would be a continuation level, which is a rally base rally. So, I mean, I guess all of you already understand these concepts, but it's really important that you actually use this and apply this to the chart and know what kind of zones that you're trading. So, well, a rally and a base, and then another rally would obviously be a continuation zone. And then we could look at this level here to be trading off, and hopefully price would come back, and then we maybe find an entry and then trade the continuation of this demand level, right? So the next one basically would be a rally, a base, and a drop, which is a reversal type of level. Okay, so in this case, we would have a rally, massive rally, and then maybe we would have some consolidation, which would be the base, and then we would have the drop, and then this would be our level of interest. And then we would wait for price to come back to this level and then try and trade from here and then hopefully catch the move down. And then on the other side, we have a drop, a base, and a drop, which would be also, again, a continuation level where it would wait for price to come back and then keep selling and continue this this trend basically of these drops. So the last one would be a drop, a base, and a rally, which is again a reversal. So see a massive drop, then we have a base, and then we see a big move up, which would be the rally. And then obviously here would be our level of interest. And then we just wait for price to come back and then hopefully find a trade here to enter long. So those are the first four key concepts that you need to understand and apply to the chart and really identify and tag these kind of zones when you find them on the chart. So you need to know, okay, this zone, what kind of zone is it? Is it a rally-based drop? Is it a drop-based drop? Is it a rally-based rally? Or is it a drop-based rally, right? You really need to be able to label these kind of zones into which ones they are, basically. And also depending on the market conditions, maybe the market is very trendy, so you should rather look on continuation trades, or if the market is more balanced, maybe you can focus more on the reversals, you know, buy the lows and sell the highs. So going on to the next key points that I personally use to identify and to validate valid supply and demand zones are basically, just get rid of this, are basically a couple of points. So the first one would be that the move would have to do a break of structure, right? So we need to see a break of structure in order to validate a certain move. So this means for a demand level, for example, if we have a certain high here, we need to see this move up, this potential demand to break previous highs, right? And obviously there could be more highs, and the more it breaks, well, the stronger usually this level is going to be. So that's the first rule, basically, or thing that I look at for potential demand or supply zone. Then the next one basically would be a consolidation before the move happens. And this is usually on like a very low time frame, usually on the M1, sometimes on the N5. So let's say we have a demand zone, right? We know it has done break of structure. In here, before the move actually happens, we need to see on the lower time frame on the M1, we need to see in this, we need to see some consolidation, right? We need to see buyers stacking their positions here to then push the price up. Because if we, for example, have this demand level, but then on the M1, it's also like this, just a move down and a move up, there hasn't been much loading going on at the bottom, right? So we really need to see consolidation before the actual move happens. Then another thing we need to see is we need to see follow through. So sometimes you will see a demand level, right? And this could be made out of one candle. So maybe this here is one red candle or basically like a high, right? This could be a bullish candle. Actually, let me change the colors of this. So let's say we have a bullish candle. Yeah, and then we have a bearish candle, which would make this a high. And then we have this bullish candle that technically breaks structure. But then here we don't really see follow through. Maybe we see a very small, you know, bullish candles, not much strength, and then maybe another bearish one right here, you know. So there isn't much follow through in this move. So we really need to see a strong move on, well, depending on the time frame that we're looking at. But we really need to see a strong move with like thick candles that are moving aggressively on the way up, well, in this case over demand, right? And then the next point would be ideally a fresh level. So what I say here as well is that use levels can work too, which is true. So if we have a fresh demand level right here, yeah, that is usually going to give us the best type of setups as the first test. So then if price goes further and reacts to this demand, but then comes back at a certain point, this kind of looks more like a support level, but it's still this demand level. So this could still work. Yeah, I've had quite some trades where the level wasn't fresh, but the level just kept holding. So it kind of depends as well on this first reaction of it. So if the first reaction of it is not strong, then there's a bigger chance that this zone will not work out as much. But if this reaction basically would be strong and again break structure, for example, then if it comes back, there is quite a high chance that this level could work again, right? So ideally focus on the fresh levels, but these used levels can work too. That's why I marked it. So you have to figure it out for yourself and look at the charts, and based off, well, many examples, you'll have to see how many times it actually could work and when it wouldn't. Now, what I said here is the demand or the supply zone has to be made from an engulf candle. So like I showed you earlier when I had some candles drawn, I'll just draw it again. So if we would have this candle right here, and then we have the bearish one that makes the high, the next candle that actually, you know, validates our demand zone in this case has to be an engulf. So it has to close above the previous bearish candle. And we need to see an engulf right here. And maybe if we have some wicks over here, but we need to see an engulf, right? Because this really shows us that this move right here is stronger. So if we wouldn't have a strong candle, we would have just a like a small candle that maybe is up until here. When we don't have all of this, then, you know, that I wouldn't even be looking at those levels. So it really needs to be an engulf for me. And then obviously we need to see the follow through, right? And inside of this, we need to see on the M1 the consolidation before the actual move happens. So the last point basically is just the time frames that I use. So I look all the way down from the H4 down till the M15. The M15 usually can be a little bit choppy. So I don't use it as much, but like the H4, the H3, the H2, the 90-minute, H1, M45, M30, M15, that's all the basically time frames that I use to look for supply and demand areas. So now knowing basically these four key concepts first of these potential continuation or reversal setups or zones, then these are the next rules that I keep in mind in order to validate a supply and demand level. And you will see that if you apply all of these, the levels, you usually have great reactions to it. Obviously, not always, nothing is working always or guaranteed in the markets, but these are very good points to keep in mind to validate levels. And also makes you have less levels on the chart, because obviously everyone in the beginning has too many levels, supply and demand levels, support and resistance levels, all that stuff. So it's good. It really is good to use these rules to be pickier in the market and to choose the right levels to trade from. So let me just get to the chart and we'll look at some examples where all these rules basically apply. So here, for example, we can see that we had a rally up, and then we had a base, and then we had a drop down, right? So let's take a look at this. We know it's a rally and a base and a drop. So we need to see, is it made of an engulf? It is made of an engulf. This candle is made of an engulf. It's an H1 or 60-minute chart. So this could be a potential H1 supply. It is made of an engulf. It's a rally, base, and a drop. Has it broken structure? Yes, it's broken these lows. So a couple lows, actually 1, 2, 3 lows already on this move down. So this would be probably a valid supply. So we're going to mark that. But we need to look now at the M1 timeframe as well to see if we actually see some consolidation before the move happens. And as you can see, when we go and zoom in on this level, we can see there was quite some consolidation here. I wouldn't say it's a perfect scenario. I will show you other zones that I remember from today's session, actually, that were, had a lot of consolidation before the actual move happened. So here you can still see that it was, well, basically this rally, and then we had some consolidation here, some position stacking basically of sellers, and then obviously the drop happened. So yes, I would class this as a valid supply zone. Now let's take a look at some other examples. So here, for example, we can see that we had a drop, that we had a base and a rally. Is it made of an engulf? Yes, this candle here is an engulf. Is there consolidation? Well, you can already see even on the H1, there is like a lot of consolidation. So on the M1, there's going to be a lot more, right? We'll get into that. Has it broken structure? Yes, it has broken all these highs. So this would probably be a valid demand zone to be looking out for. Now let's take a look at the M1 and see if we can find some consolidation. And there you go. Look at that, guys. This is just super clean. How much consolidation and position stacking was happening at this level, right? So as you can see, I drew this level basically from the open of the candle, which is how I draw them. But when there's so much consolidation inside of this basically demand, then what you can also do on the M1, which is what I do in such cases, actually, when there's so much consolidation before the actual move happens, is to make the zone a little bit bigger and just include the whole consolidation range. So it could be something like this, right? So as you can see, there was a lot of stacking happening. So this is just beautiful, perfect demand that I would say. There's also nice follow through. So this is really a zone that I'm going to be looking out for to trade if it maybe comes to it, hopefully tomorrow. Let's look for another scenario. So here, for example, we can see there was a rally, then a base, and then another rally. So this will be continuation level. Obviously, price has not come back to here yet, as price is currently much higher. It's made of an engulf. It has broken structure. It has broken previous highs. It was basically at all-time highs for at this current moment. So it has broken this high. There was follow through. It's made of an engulf. It's a rally-based rally type of zone. The only thing we need to see is on the M1 if there's actually consolidation in this range. So this was on the 23rd of July. So let's take a look on the M1. So this right here. And as you can see, there was quite some consolidation, not as perfect as the previous zone we just checked, but you can clearly see the rally and then the base where price is just moving horizontally, and then the rally started again. So this is, again, another zone to be looking out for. So we've covered already quite some different ones. Obviously, the market lately has been quite bullish, so it's hard to find now these drop-based drops. But let's see if we can actually find one on this H1 time frame, at least for sure on the lower time frame we can find one. So let's take a look. So let's take a look. I think here there's one. Yep. So here, for example, you can see there is a drop, then a base, and then another drop. And already on the H1 here, there was consolidation. So on the M1, for sure, there will be consolidation as well. So this would also be a valid supply zone. As you can see, price actually reacted from it, but during the pre-market, so not during my trading session, as the market opens right here. So during the pre-market, we had a decent reaction of about, well, 30 points. So that's a nice reaction of this level, especially, if you're trading like me with quite small stop loss sizes. Usually between 2 and 3 points is my usual stop loss size. So, guys, just review all the points that I mentioned on the slides, get on the charts and start drawing these levels using those criteria, and see for yourself how your levels play out, how they react, and choose them really carefully. It's better to have fewer levels on the chart than having too many and have it all clustered. Even if you're only trading supply and demand levels, it can still get very chaotic and messy. So try to keep it simple and just focus on those points. Be very picky with your levels before you're trading them, and also don't overthink it too much. Just follow the steps and have them, you know, in front of you before you actually use it, like choose your zones. So yeah, I hope this video was helpful to you guys. Let me know in the comments down below if you have any further questions on this. And thank you for watching, and we'll see you in the next one.